Okay, so this week, what I thought I would do is kind of take you behind the scenes a little bit and show you some of the research that I'm doing currently in my own business. Right, I'm looking at another apartment complex and just running some research on a development that I'm breaking ground on. Well, we submitted our DP on, so hopefully, knock on wood, we'll get our DP and everything will work out all right. And excuse me, why I thought I would share this with you today is a couple of reasons. The first is a conversation that I had recently with a gentleman. And essentially, his question was, Shane, should I be investing in Calgary? Should I invest in Toronto? Should I invest in Vancouver? And really, my answer was, well, it depends on what you believe. And your beliefs are going to be based on what you think about Calgary or these other markets that you're looking at. And one of the first things I ever do with clients or even myself is I try to separate fact from fiction. And what I want to find out is what are the numbers telling me about a certain market? And so what I thought I would do is maybe show you today. I'm going to go back and forth on my screen as long as technology cooperates, and just really kind of do my best to show you what what this looks like. Okay, so let's jump into it. All right. So researching your market and understanding what I call the macro and micro fundamentals. Now, one of the things that I'm a big believer in is this concept of a strategic real estate investor. And what I mean by that is investing on facts versus emotion. And you can see here some of the emotions, fear and greed, are kind of the two primary drivers that I see a lot of investors kind of falling victim to, myself included. I'm not immune. And sometimes coaching this is a good reminder, even for me. And I think one of the reasons that this is so important is before someone's going to take action and buy an apartment building, an industrial property, a retail, office, whatever it happens to be, even in residential for that matter, is in order to have that confidence, the what you think about that market is going to be grounded in something that is concrete or possibly the news. And as we know, the news is not always unbiased, right? It has a very specific agenda. It's to get your attention, and it really, in my opinion or in experience, it's not necessarily the best way to come up with an investing philosophy or strategy. All right. So as you can see, this is a great graph. I can't remember. It comes out of the book Mastering the Art of Commercial Real Estate Investing. Very good book. And you can see here, this is the cycles of market emotion, right? You can see where people generally get into the market is at that greed and euphoria. And then they as the market starts to kind of turn down, there's anxiety, denial, fear, desperation, panic, and then hopelessness. And typically, the point of maximum financial opportunity is at the bottom of the market. We're not going to get into that today. I just want to give you kind of some high level concepts on that. Now, actually, I'm not even going to get into the four phases of the real estate market. So, the big question is, where are we today? Now, I'm going to give you a macro look at Calgary because that's where I'm investing. But the same principles apply in every market in terms of how I would start and how I help my clients do the same. All right. Now, the macro variables that I'm going to start with are population growth, household income, median house prices, job growth, crime stats, and affordability. So those are the kind of 6 criteria that we're going to look at. And I'm going to go back and forth here just because some of this information is a little bit more sensitive and specific to my own investing. In terms of population growth, one of the things that I found interesting when I went into this is I think the fact that Calgary is actually net increased its population by anywhere from kind of 1.3% on the low end in 2017 to as much as like 2%, which is about 31,350 new people in Calgary in 2019. And so what this tells me is that people are moving here. They need a place to live. Okay. And in spite of the negativity around the Alberta market, this was important. Okay. Now, population growth is only one aspect, right? And we're going to get into some of the other components. Let's just get back to the slide here, or the next slide. Now, one thing I will say is when you go back as far as, I think I went back to 2000, 2005, the population growth was accelerating at a much more rapid pace, right? Between '05 and 14, it was going up anywhere from 3 to 3.5% a year. And so it's definitely slowed, but it's still growing, okay? And so it's not a dying city, in my opinion, all right? Now, just understand, I'm just showing you how I'm thinking about this. You can disagree, but set aside the bias that you may have towards Alberta or Calgary specifically, and just look at the methodology, because that's really what I'm hoping that you take away, right? And anyways, so enough of that. Now, how does Calgary compare in the last 10 years to other major CMAs or major cities in Canada? Well, you can see here, Calgary was up 24.4% between 2009, I believe, to 2020. So this is like the last 10 years. Now, important, because all stats can be manipulated and construed however the person putting them together. I didn't actually create this. This is something that I got from the Calgary Economic Board. But one of the things that I would point out here is that in a bigger city like Toronto or Vancouver or Montreal, you would expect that the growth on a percentage basis would be smaller when you're dealing with a much bigger number, right? In Toronto, it might be 2 or 3 million. In Calgary, it's, in that one, it's less than half. And so just take this into consideration when you're evaluating cities. But, valuable to see how Calgary has continued to grow. Okay, I'm going to skip some of these other graphs just because they're not as relevant. What's the next one here? Household income. Okay, so the next, I guess, variable that I'm looking at is household income. And this was a little more difficult to find. I mean, you can certainly research it, but just for the purposes of this presentation here, what I thought I would show you is what's happening today and how does Calgary compare to other markets. And one of the things that was very interesting was, at least in 2019 and for the past 10 years, Calgary has had the highest personal income per capita of Canada's major CMAs at $60,000 and has maintained that status for a decade. So once again, this comes from the Conference Board of Canada, and this was done in, I can't read that, in 2020. I think it says fall of 2020. Okay, so once again, another positive factor for Calgary. Now the next one is medium house prices. This is not so good, right? You can see here, basically from about 2011, it's kind of hard to see this graph, but between 2011, which is right here, to 2020, the median house price in Calgary has really remained flat, right? You can see here that it's dipped and now it's back up, obviously, in 2021. But that is a trend that would be not nearly as positive as you would like to see. I mean, if I had Toronto or Vancouver, I mean, this arrow right here would look like this, I would imagine. The next one is job growth, right? And so what I looked at was job growth compared to the rest of Alberta, and then job growth compared to the rest of Canada. And what you can see here is that job growth compared to Alberta, it's about the same, right? Unemployment, I should say. Right now it's at 9.7%. Alberta's at 9.9%, which is, maybe a little bit better. When you compare to the rest of Canada, we're doing much worse, right, at 8.4%. Now, during these COVID times, and depending on when lockdowns happen, this is going to skew unemployment. And so it's more difficult with these very unprecedented times to kind of figure out like what is the true unemployment and how are things going to come back online once we get back to normal, whatever new normal is. I also want to look at what are the winners and the losers inside of a market. And so if you're watching the video on YouTube or Facebook right now, you can see some of the winners, right? Mining, oil and gas, extraction, retail trade, finance and insurance. What's another big one here? Educational services and healthcare, right? Those are the big winners. Some of the bigger losers, construction, which is a little surprising, I guess, just because of the amount of new residential construction going on right now. And I'm breaking ground and looking to break ground on a second development. And I can tell you that it's not as easy to get labor right now. And so that was a little surprising to me. Another big one here, arts, entertainment, and recreation, and public admin, right? So you can see the big winners, the big losers, and take that into consideration, right? Depending on, so these are macro trends, and then how are these macro trends going to trickle down into your decisions as it relates to where you decide to invest. The next is crime rate index. And this is a little more of a complex calculation. Frankly, I'm not going to pretend to figure out how they do this, but if you go to the Stats Can, you can kind of see how your city is performing. And you can see here back in 2000, Calgary had a crime rate index of about 104. The most recent that I was able to find was 2018. It was down to 89.5. So it's improved, right? So the lower the crime rate, the better your city, whatever better means, safer, I suppose. And so you can see here how Toronto and Vancouver, I also did Edmonton. I didn't put it on here. And Edmonton actually has a much higher crime rate index. It's well over 100, the last I'd seen. And anything under 100 or at 100 apparently is the baseline. So if you're sub 100, that's a good thing. So you can see here, these major markets, Vancouver, Toronto, and Calgary, they're all below 100, which is positive. The last one that I want to talk about today is affordability. And you can see here, this is from RBC. That's a great resource for finding the affordability of your city as it relates to other the rest of Canada, right? So Canada's affordability, and I believe this rate here is overall, okay? And so for single family, the affordability is going to be a little bit less. I think Calgary was 44, but condos was 25%, okay? And so what is the share of income of a household that would need to cover the ownership of a property, right? So obviously single family homes are a lot more expensive than condos. And so you would expect that. But you can see here, Edmonton would be the most quote unquote affordable. And this is based on income and the cost of property. Vancouver at 85%. I mean, that's just remarkable. Toronto at 66. So, and this was as of fourth quarter 2018. So I wasn't able to find a more recent. I imagine these numbers in Calgary and Edmonton would be fairly similar. Vancouver and Toronto, they may have gotten worse just because I know those markets have continued to rise. So those are, you can see all the graphs and data and stats that I compiled, if you will, but I don't want to get into all of that because this would turn into a webinar, not a podcast. And I'm at 14 minutes, so we'll keep going here. All right. Now, in terms of drilling down, I'm just going to stop this. Okay. As it relates to drilling down onto a market, I think what I want to show you are a couple of the variables and factors that I'm looking for when I'm really trying to get into a neighborhood, right? So what we did is we took the macro and we said, what does my city look like based on those 6 variables? And then once I get into an actual property that I'm looking at in a specific neighborhood, a submarket or a neighborhood, then I'm going to start to drill down even deeper, right? Now I'm going to start to look at vacancy rates. I'm going to look at what's under construction as a percent of inventory. I'm going to look at the cap rate of this property versus other areas of the city. I'm going to look at all of the units under construction in my submarket. I'm going to look at the market rent versus unit growth over the past 5 years. I'm going to look at the total inventory of units. I'm going to look at the last 12 months sales, right, on a price per door. So this would be more on multifamily because that's specifically what I'm looking for. But you could probably modify this to industrial, retail, office, mobile home parks. That'd be a lot more difficult just because there's not, nearly the, you're not going to see very many under construction, and it's just a lot more difficult to get that type of data. But these would be what I'm looking for as I start to drill down onto a neighborhood. And I think that, just to kind of zoom back out for a second, whenever I'm investing, I start big, broad, and then I go deep. And all of this research, if you will, there's free research. So most of the macro stuff you can get online just takes a little bit of time, right? You just type in your city and population growth, median household income, affordability, crime rates. I mean, you can Google that and get that. Once you start getting into the micro and the drilling down onto a neighborhood, in my experience, it's more difficult to get quote unquote free information. And so for me, I will pay for it. But if I'm looking at a $5 or $10 million investment, to spend $5,000 to get this type of data is invaluable. And so, not suggesting you do the same, but if you are going to make that type of an investment, I think it's well worth the commitment of investing and in order to get that type of data, right? Especially if you're raising capital. I mean, if you're raising capital and you're using other people's money, then I would certainly advise on just making sure that you understand all these variables. Because if you don't, most likely what will happen is in conversation, someone's going to ask it and you're not going to know what the answers are. And I can tell you, for example, just understand the vacancy rate or what's under construction or the total number of units that are coming up maybe in your in this submarket that you're looking at. You may or may not have that question asked, but if you're going to sophisticated high net worth investors, there's a good chance that they're going to ask those type of questions. And if you know it and you can show a graph that clearly illustrates what's going on, boy, you've just really established yourself as a credible, viable source of information. And now the confidence to give and invest in your deal goes up exponentially. Whenever I see people that are doing this at a very high level, the number of graphs and research and data that they have, it's just overwhelming to the point where, you don't even ask the question because you just know that they've got it, right? They may not know it off the top of their head, but most likely they're going to be able to find it in, a couple seconds. So enough of that. One of the things that I found interesting as I was doing some research for this, I was listening to a webinar yesterday with a gentleman. His name is John Burns. I think that's it. He's one of the top real estate analysts, and his company advises on some of the biggest developers, residential developers in the U.S. And he was talking about this concept that I had not heard before. I mean, I knew it intuitively, but I didn't understand the implications of it. And this is why it really pays to listen to, and hopefully, even if you just get one thing out of today, this concept of a headship rate. Okay. So this is a term that's used in the US. I'm not sure if in Canada we use the same thing, household density. But essentially think of it this way. If there's 100 single individuals, they need 100 roofs over their head. Could be condos, could be single family. Okay. Now, if those 100 people are all married, now you've got 50 couples, right? They only need 50 roofs over their head. Now, when I was listening to John, he said, he asked the lady that was interviewing him, do you know what a 1% change in headship count does in terms of the requirement for either more or less inventory? And, no one on the call had the answer. And he said, well, I'll tell you what it is. A 1% increase in headship essentially requires $2.5 million or 2.5 million more properties in order to house these. If you think about essentially, it would be 2.5 million people that get divorced. For example, this was kind of an example that he used. And I think during COVID, that was, divorce rates went up. You would need 2.5 million more properties in order to house all these people. And so this was just a really fascinating stat that I was not aware of, but it goes to show how important having the data and research is, right? Because if, divorce is up right now, but if it starts to go back down and people start to, get married or start dating and moving back into with one another, what is that going to do to the demand for 2 bedrooms, for houses, for bachelor suites, right? I mean, these are questions that you're probably going to want to answer. And I can tell you, when I was doing a bunch of research here, even in Calgary, one of the things that I noticed was the, what would I say, the high vacancy on bachelor suites versus 1 and 2s. And so just knowing that has really started to guide my thinking on the type of developments that we're looking at specifically as it relates to multifamily. So that's really what I wanted to talk to you about today. I'll just zoom back over to this really quick. And if you're looking for kind of a recap on some of the market drivers that I look for as it relates to investing and really where to put your attention and focus, the 3 drivers, if you will, would be demographics, financial, emotional, right? So those would be the 3 kind of big areas. And then within those 3 areas, what I would say is kind of drilling down on them in terms of demographics. We've talked a little bit about some of this: population growth, net migration, first-time home buyers, new construction, employment. Okay. Inside financial, rental levels, what's your return on investment? What's the affordability? What's the net migration, GDP? And then some of the emotional factors, which still impact valuations on real estate: days on market, number of listings, sales to listing ratio, first-time home buyers. And I think that those would be, a few other kind of variables, if you will, that you may want to research if you are planning to invest in, multifamily. Certainly on industrial, you would probably start to factor in some other variables, certainly supply and demand, vacancy rates, interest rates, where are they going? And these will all, I think, give you a firm understanding as to whether or not it's a go, no go. One last, story. I wasn't even planning to talk about this. So my business partner and I were looking at, let me take a drink of water here. We were looking at doing an industrial project in Airdrie. And I said, well, before we submit a letter of intent, let me do kind of 25, 30 minutes of research. And in that short amount of time, I saw what was going on in Airdrie as it relates to the specific type of industrial that we were looking at. And what I can tell you is that 30 minutes saved us the headache of potentially 6 to 8 weeks. Maybe we put the property under contract, and then we start to go down the path of, okay, what pre-leasing, what are the rates, it really helped us get clarity and an understanding of what the market is doing and what it has been doing and trending for the past, in this case, I went back 10 years. So, just that 30 minutes of preparation can save you. I mean, let's say we put it under contract, then we get a purchase and sale agreement, and then we start to talk to brokers. I mean, set aside the $5,000 or $10,000 of due diligence money that you might spend. Think about the 8 weeks of chasing after a deal that fundamentally just doesn't make sense. And so that's really what I wanted to say. Really what I wanted to kind of finish off with is doing this groundwork to this preliminary groundwork, I think, is just so valuable. Not sure if this is helpful. I know this kind of gets into the weeds, and some people might want to, different topics for me to talk about. Let me know, right? If you are watching this or if you're listening to the podcast, send me an email, Shane@ShaneMelanson. Let me know if you enjoy this type of kind of deep dive in the weeds. It's certainly not the sexiest thing to talk about. I was kind of reluctant, but at the same time, these are some of the things that I do. Not always, but certainly understanding my market and really what's going on is just very valuable. And if you're raising money and investing in 7 and 8 figure deals, I think it's a must. So that's it for now. Have a great day. And I guess one last thing. I mean, I've created a commercial real estate scorecard that I use. If that's something that would be of interest, you can email me, Shane@ShaneMelanson. Just go to my website. There's probably a place on there that you can easily get in touch with me, and just put in the subject line scorecard. I'll know what that's about, and happy to send you that. Bye for now.